Hey traders, Jamie Saettele here. It is April 15th, 2020, and we're going to look at the Australian dollar today. So this is a weekly chart. We're going to start with a longer term chart here. Several reasons. One, the level that we're at today is extremely important. You'll see why in just a minute. And two, I just, generally speaking, do kind of like to zoom in from a longer term time frame anyway, for context, right? To know kind of where we are within the grand scheme of things. So if we channel the rally from 2001, right, into the 2011 high, you can see this channels pretty well. I mean, it didn't top tick, the 2011 high by any means, but I mean, in the grand scheme of things, it's pretty good in terms of identifying, a major, potentially major resistance level, right? This is log scale, by the way. That's important because if you were to draw this with arithmetic scale, longer term chart, it's going to look a lot different. Okay. General rule for me is kind of log scale on longer term charts. FX, the further you go out, near term is not going to matter a whole lot because the price changes are relatively small. But as you go further out on the time scale, it does make a difference. All right. But the most important thing a lot of people don't pay a whole lot of attention to is actually how a market reacts around the channel's center line. Okay, this center line in the channel here, now that would have been 2010, May 2010, flash crash actually. You can see that was great support, right? Support for several weeks there, actually 3 out of 4 weeks, 3 out of 5 weeks in May and June, I believe. 2010 also was pretty solid support back in August of 2013, okay, and September. Now fast forward to the current situation that we're in, and you can see that this channels perfectly as well, right? I do draw my channels typically with, I don't care that it cuts through this. I'm drawing it from the high point to, the kind of the next pivot high, okay? And we extended the parallel off of this 2016 low, and lo and behold, that kind of March crash in in kind of everything, right? Actually nailed support here on the Aussie dollar. Now we are already back to the center point, right? The center line. So remember how we acted back here in 2010. Center line was support. Well, looky here, we are at resistance now. In fact, if I go to a daily chart, zoom in, can kind of see here a little more detail how precise this line is, this center line is. Support here, even support back here on February 28th, okay? And then we finally crashed through it on March 12th, and it was kind of all she wrote until you got to the bottom parallel. So here we are now, and the point being here is that the big way I look at trading, I mean, no one can predict what's going to happen. I don't care how much information you think you have or how smart you think you are, right? The idea is to identify points of reference where you can take a stand with a relatively small margin of error, right? Where you're wrong. So in this case, we can look to be bearish here with stops up here. That simple. Going in and coming down to, let's go to a slightly different chart here. I'm going to bring in hopefully you guys can see this. This is a slightly different chart, but you can see the RSI, this daily RSI. Generally speaking, we call it RSI range rules, and very deep oversold levels. You tend to find resistance in price once the indicator gets back to 60. Okay, it's not always the case, of course, but it is often, and that just happened here today. So we were above 60 and rolled over, and this being after we were at extreme oversold levels. Now I'm not sure, this might actually be a much more important capitulation low. We kind of reference that with the lower channel line hitting that level, right? But as it stands here today, we are in a bearish RSI profile, as I like to call it, right? A bullish RSI profile would look something like this. Let's go back in time here. Just, so you can see here, like back in 2009, 2010, you get the rally and you're going overbought the whole time, and you can see your support, is kind of down near 40, right? Fast forward to say 2010, 11, this is a great example of it, right? Support 40, overbought, support 40, overbought, support near 40, overbought, support near 40, okay? So that's not what we have today. We have the opposite. So moving forward, I'm actually going to go to a futures chart here and say where we might have support. Futures, by the way, and spot are trading essentially the same right now, I think, 63.20 or so. So these levels should be the same. Well, this is volume weighted average price from the low. And that was perfect support back here on April 3rd. That's going to be currently about, 60, 70, let's call it that. And I like that it lines up with this high here, which is the 325 high. So that would be a level that I'd look towards on the downside as a short-term trade. So that level right there is 60.73. Okay? And there you go. So pretty simple in terms of identifying a point of reference to trade against. In this case, that level we're trading against is the high this week in the Australian dollar, and reward to risk is relatively skewed to the downside. I mean, depends where you can get an entry. I mean, if you can get an entry up near 63.70 or something, you're talking 70 points risk. What we got here? About 300. So, you're a little better than 4-to-1 on reward to risk there on the downside, which I will take. I don't like to take anything that's less than 3-to-1. All right, that's it. I hope you enjoyed the video. I hope you learned something. Hope you got a decent idea out of this. All right, take care. Again, Jamie Saettele here, signing off. Bye.